Hi fam, Chart Gal Lori here. I get a lot of requests for trade review on actual trades that I've done and what the strategy was and what was my approach and instrument used. So I'm going to go over a few trades that I did today. We're going to start with Netflix. Dan also highlighted this trade setup in chart preview this morning, pre-market. So when you look at Netflix on the daily, it was a very bearish chart. So let's look at the daily. We had EMA resistance overhead. It looks as though it needs to pull back and form a higher low. Then that higher low may come in the form of a bull flag. I have no idea what type of higher low it would form. And I was also looking at this 336.16 over here, prior support, and looking for that to act as resistance in real-time trading. So the way that I start my day is in pre-market. I draw these lines on my chart. If Netflix broke 337.22, I had no interest in let me make sure we're recording. I had no interest in a bullish trade because I thought the longer term time frame had a bearish setup. So it was bear trade or nothing. So I had my dashed line here at 334.72. As soon as Netflix broke 334.72, I entered puts. Actually, in this scenario, I like to enter a small scale of puts. So let's just say that 3 puts was your target. So you could enter 2 puts here at 334.72, and then you could exit 1 as you drop down, and then you could re-enter, say, 2 on a back test of the EMA. So I like to trade in and out. So as we're getting into good profit, take 1 off. As we're back testing EMA, yet it still looks bearish, like a bear flag on elevated bear volume, possibly re-enter a put. So I do that often. I just want to throw that out. So this wasn't a straight up enter 3 puts trade and then exit down here. I scaled in and out on a shorter term time frame. So here I entered 2 puts, I exited 1, I entered 2 puts because there was no way we were going to the high of day. Well, it was low probability, so I entered 2 more puts, and then I exited down here on the 5-minute. On the 2-minute, it was a triple bottom. On the 5-minute, it was a double bottom. So I exited around 329.50, and I was happy with that trade. I got some mixed signals over here. I thought Netflix looked bear flaggy. I was looking for a bull break with no follow through to possibly enter, and then it had a pretty decent bounce. So I didn't like it the rest of the day. I didn't trade it because I didn't feel like it was clear to me on the 5 or even the 15 minutes. So then I just let Netflix go. I was happy with my initial trade and I just let it go from there. And also SPY was getting grindy at that point as well. So I don't want to get caught up in any option premium. So my best trades definitely come in the earlier in the day. My second trade that I took was Amazon. So I had my line on the chart of prior support at 1893.63. That was my get out of all bull trade signal. So I was looking for a vol climax on the 2-minute, and I kind of like this volume bar here, how it was pretty extreme. We had the 1 hour and the 4 hour finally approached oversold. So when it flushed 1900, I like these bottom wicks, and I entered right here. I posted in chat that I really liked that it was forming, and not that I liked, but that it's possibly forming an inverse head and shoulders. And I should add that I entered August 2nd, $1,900 calls. So on a Monday, I feel really comfortable entering same week. As we get closer to, let's say, Wednesday, by Wednesday of that week, then I'm entering the following week options because I don't like messing with time decay. So especially on these high-tech premiums. So I entered, let's say, around $18.99, and then I saw this inverse head and shoulders. I stayed in on this pullback, and then as we approached the 26 EMA on the 2-minute, I exited my trade. And with Amazon calls, an $8-9 trade, that's pretty good profit. So I was happy with that trade. I didn't see another trade I liked in Amazon. The rest of the day, I thought that these pullbacks are pretty extreme, and it was just kind of mirroring SPY and its up-down-ish. So I stayed away from Amazon the rest of the day. Tesla, I had 2 trades. So Tesla, looking on the 5-minute, we had this pullback. And overall, Tesla, we were looking for a higher low. So I had a bullish bent on Tesla. Oh, let me go back to Amazon. My apologies. The other reason I stayed away from Amazon is I didn't have all the information. So when I was scaling in over here, I didn't realize Amazon had been downgraded. So that kind of kept me away from bullish trades, and then it was too oversold to do bearish trades. So that was another reason I stepped away from Amazon for the rest of the day. Okay, back to Tesla on the 5-minute. I bottom fished this higher low of 226.03. So I entered around here, let's see, around 226.50, and I entered commons. The reason I entered commons because I didn't like the way the options were priced. So options, I like to go one out of the money on high-tech options, calls, or puts, and I just did not like the premium. So I entered common, and I entered right here, I exited at this double top of 229.74. I exited. I missed a ton of upside. Typically on a trade like this, if I get stopped out at this double top and it's a fake out, then I'll re-enter when it breaks that level. My focus had moved on to SPY, so I did not finish this trade, and that's okay. I had about $3 to the upside, so no harm, no foul. Then later in the day, I was looking at 332.50 puts for 8.2 for Tesla, and I saw this 5-minute lower high form, and I entered, and then I saw this little machination form, and then they started buying that dip pretty fiercely, and then I zoomed out, and I was thinking, that's kind of bull flaggy. I think it was on the 30-minute. It really looked like a bull flag, and they were just buying it. So I got out pretty quickly. I got saved on this one. I didn't do too poorly on these puts. I really didn't like the way the puts moved because, again, high premium, and with Tesla, you just have to factor that in. I may have done a little bit better with commons on this. Let me do the math. Possibly. It probably would have been the same with commons and options. And options are supposed to be a more powerful tool if you have the direction correct in the short time frame. And it just did not work out for me like that. The profits were good, but they were not great compared to Amazon and Netflix. Let's see if I can show you one more trade. So on SPY today, I entered puts when SPY on this bounce, we were looking for a lower high on the 15-minute. So we had this 301.37, then we had this pullback, and we were just looking for a lower high. I was looking at the 5-minute. So when it hit this EMA here, it was actually a little bit of a scary trade, and scary in the fact that it wasn't pulling back with decisiveness. So I exited that trade with about a 20-cent profit common-wise, but I was in SPY put same-day expiry, so you really have to be quick on those. Had not planned on going over this trade. That's why I'm not prepared, but I definitely want to show you why I did what I did. Hopefully I'm not making you sick. So I entered SPY puts over here around, it was like 301.60 because I did not expect that we would go back to the high of the day. And then as we pulled back and as we got farther away from the EMAs, I knew that bears weren't doing it on a high volume, so I exited with about 20 or 30-cent profit. That was a nice trade. That was actually really good profit, about 48% when I calculated on these SPY puts because they were same-day expiry. But again, you have to get that direction right and get it right fast, or it can burn you with decay. I hope this helped. That's the end of my trade review for today. And as trades come up during the week that I think may help someone go over my strategy or instrument used or rationale, then I will make another video. I hope y'all have a good night.